Interest rates are rising and mortgage repayments are set to soar, so this might sound like a good idea.
We'll pass a law limiting all home loan interest rates to be below 3% for the next 5 years to save your home and Australia's way of life.
But is this even possible? Former Reserve Bank economist Zach Gross says there are a few ways it could be done.
The first is just to have taxpayers fund the difference between what the banks are charging and that 3% upper limit, but that would be very expensive to the federal budget.
If you want to do it for 2%, that's 26 billion, and you want to do it for 5 years, well, you're getting well above 100 billion.
Liberal and Labor have racked up a $1 trillion debt. This will trigger interest.
For a party campaigning against the nation's soaring debt levels, this doesn't seem to add up.
I think we can legislate to limit home loans, because if you look back in the 60s and the 70s, that's how the interest rates operated in this country.
An economic grind in which crippling mortgage repayments have gobbled up a bigger and bigger share of the family income.
Former Reserve Bank board member John Edwards bought his first home in that era and says things didn't work too well back then.
Well, first of all, you'd beg some of it from a bank, and reluctantly they'd give you some. But you had to get more to actually buy a house, and often a real estate agent would say, look, we can get the rest of this money from a lawyer's office, but it'd be a higher rate and a shorter term.
Zach Gross says it probably wouldn't work any better now.
If you force banks to make a loss on the mortgages that they issue, well, then they're going to stop issuing mortgages.
There is a third way to lower mortgage costs. UAP leader Craig Kelly says the government could raise money by selling treasury bonds at very low interest rates and on lending that cheap cash to retail banks. The problem is the current bond rate is already above 3% and no investors would take a lower return. Another option would be for the Reserve Bank to issue cheap loans, as it did during the pandemic. But the government would probably need to use the Reserve Bank Act to order the central bank to adopt this policy. This has never happened, and there's a good reason why. Before the government gave the Reserve Bank full independence in the early 1990s, inflation frequently got out of control.
So there's no free lunch to be had here. We could force the RBA to issue more funding to banks in order to lower mortgages, but it would come at the cost of higher inflation and be quite costly to the rest of Australia.
Zach Gross says it could undermine the Australian dollar and threaten the whole financial system.
I'd say there's a small probability of hyperinflation, but if you wanted to go about causing it, this is exactly what you would do to do so.
There's one final thorn in Clive Palmer's plan for a 3% mortgage cap.
There would be a very small outside chance that you could get up in Queensland where he's the lead candidate, but other than that, the UAP has no realistic chance of winning a seat anyway.
That means there'd be absolutely no pressure on the next government to back any UAP policies.